Hey, what's up everybody? I hope you're having a great day. This is James Godin, and in this video I'm going to go over my personal crypto trading and investing strategy for 2018. In this video we're going to go over first selecting crypto assets. I have a checklist I'm going to go over with you, and then I have a crypto exchange diversity plan, a way to mitigate your risk in the exchanges that are out there for cryptocurrency, because sometimes, for whatever reason, some of them can go down. We all know that from the Mt. Gox incident that happened. The third thing is buying crypto assets. Okay, so that's just buying your cryptocurrencies is all that means. And fourth is protecting your assets, right? We have to have security measures in place. We got to protect the things that we're investing in and we're trading, because what good is it to go and trade and invest and build all this wealth in a portfolio if it's open to risk and open to being hacked or lost? So we want to make sure that we protect that. And fifth, we're going to go over a 50-50 trade and hold strategy, so that you can build out and scale your crypto portfolio in 2018 and beyond. So first we have the crypto asset checklist, and the first thing that I want to cover, we have 4 things to go over here, but the first thing is I always want to ask when I'm looking at a cryptocurrency, is there a real world application, right? What is it doing, right? What kind of value does this cryptocurrency or the company or application that is behind this cryptocurrency, what is that doing in the marketplace? Who is it serving? Who is it helping? And if there's a real world application, then okay, I'm going to go on to the next step. The next one being, is there a high demand in the marketplace? Is this application being used by a lot of people, or is there a great need? Is there a high demand for this kind of a service or application out there in the marketplace? Now, cryptocurrencies and the underlying technology, blockchain, make it possible for extremely advanced applications to be developed on this new, faster, and more secure network. So there's all kinds of developers and companies and startups that are creating these amazing new applications and programs and services out there. And the thing is if there isn't a large demand for it, then it's probably not going to do very well, because a lot of times what these people are doing is, and these companies, they're tokenizing their company, their service, or their application. Meaning what they're doing is they're using a cryptocurrency as a store of value for what they're actually providing in use value out there in the marketplace to their consumers. So I want to make sure it has a real world application, and I want to make sure there's a high demand in the marketplace. The next thing on my checklist is there a strong team behind it? Who is building it? Who's developing it, right? What have they done? What's their track record? Are they well known in the industry? And even if they're not well known as far as cryptocurrency and blockchain technology is concerned, are they at least a very well-known entrepreneur, or do they have a successful business record? So if they come into this space, even if they're new to cryptocurrency and blockchain technology, do they have a strong enough background and skill set to be able to come into this industry and have a high likelihood of success with what they're bringing to the marketplace, right? I want to make sure that there is a strong team behind whatever I'm investing in, because it doesn't eliminate all of your risk, right? There's still a chance that company or project could fail, right? But there's a much higher probability of success if there's a strong team behind it. Now, the fourth thing is this something that's within your budget and your risk tolerance? And I say this, and I want you to hear this, because some of you that are watching this, you have a lot of expendable income. So you have all kinds of income and available money that you can just throw around with ease, right? And that's fine. That's okay if you have that. That's good. Even then, you should still be mitigating your risks so you don't just carelessly blow through money, because that could happen very quickly in the crypto market, or really anything that you're investing in, to be honest with you. But if you're especially starting with a small budget, and you don't have necessarily a lot of money just to be throwing around or losing if things go south in a hurry, what I suggest is that you think about this currency that you're getting into. What is it selling for? Is it something that's hundreds of dollars per coin? Is it something that's only pennies or maybe fractions of a penny? Look at the overall value, look at the real world application. Is there a high demand for it? Is there a strong team behind it? And does it fit within your budget? And are you willing to risk whatever it is that you're going to put in there financially into that cryptocurrency, where if this goes really well, awesome, the reward is huge and it was a risk well taken. But if it goes in the other direction, which is possible, then are you willing to lose whatever you put into that? Are you okay with that? Can you comfortably move forward if that were to be a complete bust? That's what you want to make sure. You want to make sure these 4 things are checked off, and if you've done that, then I think you're in pretty good shape moving forward. Again, not going to guarantee your success in anything that you invest in, but it will at least lower your risk. All right, and you'll at least be entering into some sort of investment or trading situation with cryptocurrency, and whatever technology is backing it, or whatever application is backing it, whatever team is backing it, you'll be entering that space with at least enough education and understanding that of what you're getting into. Okay, and if it's something that you can stand to financially as well as psychologically handle. Okay, so you want to make sure that you check off all these things. Now, as far as exchange diversity is concerned, the reason why I think this is important is because it's like that age-old, thing where you never want to put all your eggs into one basket. It's just not a smart idea, because even the most successful, biggest, most profitable businesses on the planet can go down in an instant, and we've seen that happen a lot. You can do your own research on that, but it has happened a lot. Okay, more than I like to admit, right? But here's the thing: with cryptocurrency exchanges, it's no different. We saw that with Mt. Gox, right? It was here and then it's gone, right? It gets hacked and people lose tons of money, millions of dollars lost, right? So what I'm saying to you here is that while there's things out there, and even maybe months after I put this video, some of these might not even be there anymore. That's how volatile the entire market is, and how fragile it is, because it's so new, it's so young. But because there's such a high risk, the rewards are so high. But okay, that's a side note. Let me get back to this. First of all, you have places like Kraken, Binance, Bittrex, Bitstamp, Coinbase. Coinbase also has their own advanced exchange called GDAX. So that's actually owned by Coinbase. I just didn't put it on here. Poloniex, Cryptopia, and Gemini. I actually have accounts at all of these places, so I'm not just telling you check them out. I actually have accounts here, and I'm using these accounts actively. I'm verified. My identities are verified with these accounts, and I'm using them actively. So the reason why I want you to have multiple exchanges is it doesn't necessarily mean that you're going to be using all of them all at once all the time. But let's say that you're using Kraken and you build up a portfolio where you have a few $1,000s in it, or you have enough in it where it's more than 2 or 3 weeks worth of salary or pay for you, and you're like, okay, that's kind of pushing my risk tolerance a bit, and I want to take some of that out, right? So what you want to do, we'll get to where to put that here in a second, but what you'd want to do is start by diversifying. You say, okay, well, I have this much here. Maybe let's take half of that and let's put that in Binance or in Cryptopia or Bittrex, right? So we might take half of one and put it in another, and that way we have our assets split between 2 or 3 different exchanges. So if something should happen to one exchange, you can still continue trading and investing in those cryptocurrencies on another exchange. But there's another reason too. The other purpose of having multiple exchanges is that certain coins are listed on certain exchanges, but not other exchanges. But then some coins are listed on like every exchange. So something like Bitcoin or Ethereum, right? Those are going to be listed on like every exchange, right? Because they're like huge cryptocurrencies. They're like in the top 2 in the world. Now, other ones that are fairly new or they don't have as much history as something like Bitcoin or Ethereum or Litecoin or something like that, they're going to start out on some smaller exchanges and eventually they'll spread to some of the bigger ones. And you might be trading those on smaller exchanges. Meanwhile, the bigger ones that you've been using are trading other coins that you want to be involved in, but don't have the newer ones. So you kind of want to mix it up so you can be involved in as many of these different coins, because you want your portfolio to be diverse. And sometimes, in order to diversify the portfolio, at least in the case of cryptocurrencies, you'll have to split them between multiple exchanges in order to diversify at a high level. But some of these bigger ones like Binance and Bittrex, Poloniex and Cryptopia, those ones are actually really good. They have a lot of the cryptocurrencies, not all of them, because there's something like 1,400 of them at the time of recording this video. It's January 11th, 2018 at the time I'm making this, and there's over 1,400 current cryptocurrencies that we are aware of that are listed on coinmarketcap.com. So that's what I wanted to share with you about exchange diversity. Hopefully that makes sense to you, and hopefully you take that advice, because it is a way to help you secure your trading and investing accounts, as well as be able to diversify more, which ultimately lowers your overall risk. So the next part is buying the cryptos, right? Once you have these accounts and they're verified, you want to start buying some cryptos, right? Because some of them you're going to want to trade, some of them you're going to want to invest and just hold them long term. We're going to get into a strategy about that soon, but here's some of them, right? Here's just a dozen of them, ones that have really stood out to me. Not all of them that have stood out to me, but a lot of them that have. There's Bitcoin, obviously, that's, the granddaddy of them all. And then you have Bitcoin Cash, which was just a split of Bitcoin. So basically, at a certain point, I want to say, don't quote me on this, but I think it was possibly around August or September of 2017 where there was a split, and whoever already owned Bitcoin at that time automatically got some Bitcoin Cash. And right now you can buy and trade Bitcoin Cash on a lot of these exchanges. I know it's available on Coinbase as of the time of making this video. Now, there's also ones out there like Ripple that are serving. That one's kind of shrouded in a bit of controversy among the cryptocurrency world, because it tends to be it leans more toward a centralized digital currency more than a decentralized, which is what cryptocurrency and blockchain is really all about. So the underlying essence of cryptocurrency in general is supposed to be decentralization, right? And Ripple, kind of doesn't follow those same rules or guidelines, and kind of makes some people a little bit uneasy or angry even. But for me personally, I don't hold a grudge against any of these things. I mean, I love the idea of decentralized currencies, but I mean, come on. I mean, you can't expect something this amazing to come out and not think that the old school financial institutions aren't going to want to get a piece of that, right? So we'll always have our own coins. We'll always have the decentralized ones, the private ones, the ones that are, near and dear to our hearts. But there's nothing to say that, if the big old school financial institutions want to play in the game and they create something that is, or they partner with some sort of company like Ripple that is helping them get in the game, hey, if it creates value in the world, we can capitalize on it, right? Why not? I see it like, if the banks have capitalized on all of us for so long and they want to get into our game of decentralized cryptocurrencies, why not let them come in, and while they come in, let's cash in on their greed, right? So let them be greedy, you know what I mean? Let them come in and play the game with us, and let's capitalize. Let's trade on their cryptocurrency of choice, and let's make some profits, right? So that's my feel on it anyway. You might feel differently. It's totally cool. But point is, it's a viable thing out there, and it's something worth looking into. Dogecoin, it's kind of like like a meme type of a thing. It was actually released as a joke, but it somehow managed to reach a $2 billion market cap. And, there might actually be a legitimate market out there for novelty coins like this, right? And that's why I hold it. I don't hold it because I think it's going to be like a massive currency, like something like Bitcoin Cash or Dash, Monero, Ethereum, or Bitcoin, or any of those things. Like, I don't think it's going to be widely used, but I think it's going to somehow hold its own as far as novelty is concerned, among the gamers of the world, and the people that like the goofy, funny YouTube videos and stuff. Like, they like that kind of, the same types of people that buy novelty t-shirts and mugs and things like that, they're going to buy the novelty cryptocurrencies. So I said, sure, why not? There's some sort of value in there. Not as much value as some of these other coins, but still some actual real-world value. So why the heck not, right? Patcoin, Stellar, which is doing something similar to Ripple, Nem, Cardano, Dash being, they're really trying to take this digital currency thing to the next level. They're trying to do it faster, better, and more secure than what Bitcoin has been able to do so far. So we're going to see how that plays out. So far, it's been going pretty good for them. Litecoin, I believe, was a split of Bitcoin a while back. I don't know enough about it to really speak too much on it, but I think that's what it was. I heard that somewhere. Ethereum is really interesting because, yes, it can be used as an actual cryptocurrency, but at the same time, that's not what it was created for. It was created as a network for developing applications on the blockchain network. So really, the Ethereum network is what's made it possible for all of these other altcoins that are not Bitcoin. Whenever I say altcoin, I'm just saying any cryptocurrency that is not Bitcoin. Okay, it's an alternative to Bitcoin. So Ethereum basically made it possible for these tokens to be created, and then those tokens turn into a coin, which is on the Ethereum network. So it's actually, it's called an ERC20 token, which then becomes, when they launch it in the marketplace, it becomes an ERC coin, which is just an Ethereum network-based cryptocurrency, which is pretty cool. And the thing is as more of those succeed and become more popular, Ethereum's value goes up, because all of the new applications that are being developed now are being developed on the Ethereum network. So the more of those things that succeed, again, the more people that use those applications, the more valuable Ethereum becomes as a result of that. So that's just a little bit of insight into buying cryptos. Obviously, you want to follow the previous advice in the beginning of the video, where you want to make sure you go through that checklist when you're doing your research. But then, obviously, once you have your exchange accounts, now the cryptocurrencies that you've done your homework on, you've researched them, they meet all your criteria on the checklist, and it makes sense to you. Now you go in, you start buying them. Now, after you bought them, you want to make sure you're protecting your assets, okay? You want to make sure that you protect it from beginning to end. So in the beginning, you're signing up for these cryptocurrency exchanges, and these exchanges have these two-factor authentications, and it's a layer of security online, so that only the person with your smartphone that has the Google Authenticator app or an Authy app, which integrates with Google Authenticator, can actually have the code. It's a security code, a 6-digit security code that's unique to you, that refreshes every 30 seconds. It makes sure that only the person with that code can log into your exchange accounts, and you can even, on some of those exchanges, you can set up your security in a way that not only do you have to have that code to log in, but you have to have that code to initiate trades. You have to have that code to buy and sell currency, as well as trade one for another, and you have to have that code to deposit funds or withdraw funds from your account. So that way there's security at every stage of the game, and you make sure that no one can access that unless they have your Google Authenticator code or the one that's on Authy, which directly integrates with Google Authenticator. Now, once you've secured that level of just on the exchange, the next thing you want to do is you want to make sure that you have a secure place to store your cryptocurrencies off of the exchange. Okay, because just because you have multiple exchanges, and that lowers your risk, like if one went down, you have another one to fall back on. But at the same time, if you have some money in one of the exchanges and it were to go down, and it was more money than you were willing to risk losing, then all that money's gone. Right now, they might be able to recover some of it for you, possibly all of it, but there's a very high likelihood it would be gone forever, right? Because that's what happened with Mt. Gox. It was just gone, right? Wiped out millions of dollars, tons of money, right? So what you want to do is you want to have a Trezor or a Ledger Nano, right? And you just go to one of those websites, and I'll leave links to all this stuff in the description of the video so you can have easy access to this stuff so you don't have to go searching for it on your own. But what you want to keep in mind is that those two wallets are hardware wallets. They are cold storage. It keeps your cryptocurrency safe off the internet. No Wi-Fi, no Bluetooth, none of that. And it's in your possession. The only way you'd ever lose it is if you physically lost the little drive that they send you in the mail, or if you lost the private security keys to get access to it. Right? Those are the only ways. So you just want to make sure that you keep the device itself safe, right? And you want to make sure that you keep the security codes they give you safe, because those security passphrases they give you are your way of recovering your funds. If you were to ever lose your Trezor or your Ledger, or if it were to break or malfunction, you could buy a new one or use an alternative wallet and type in those codes and be able to transfer just like that everything that was on the either the lost or the broken or the stolen device will automatically transfer to your brand new one. So you want to make sure that you have that layer of protection available to you. And the reason I put my Ether wallet on there is because with Ledger and Trezor, you're able to store Ethereum. And I'm 100% sure you can on Trezor, right? Because Trezor is what most people that I know are using to connect to my Ether wallet. Okay? And my Ether wallet is just a way to store all of your altcoins. So basically, if an altcoin was built on the Ethereum network, meaning that it's an ERC20 coin, and you can find out if your coin is an ERC20 coin or not by just going to Google and saying, is this coin an ERC20 coin? And that should be available on a lot of different websites out there. So once you confirm that your coin that you've invested in is an ERC20 coin, then you can connect your Trezor to my Ether wallet, and you can use your Ethereum address on Trezor to store all of those altcoins. So that way you don't have to leave them out there on the exchanges. And what I personally do is I only leave an amount on the exchange that I'm going to be trading within the next 24 hours, if I'm trading. If I'm holding long term, then it's on my Trezor or my Ledger, and I have both, right? I have Ledger and Trezor because I like them both. And there's certain coins like Ripple that you, at the time being, you can only put on Ledger, but you can't put on Trezor. So I have both. But the point is you want to have that extra layer of security, and you want to be able to take anything that you're not willing to lose and anything that you're not going to be trading with in the next 24 hours, put it in your hardware wallet so it's safe. So if anything were to happen, I'm not saying it will, but if it ever did happen on any of those exchanges, all of your investments that you have put into cryptocurrency will be safe. Okay? Make sure you do that. You got to protect what you're doing here. It would be so terrible if you had all of your money that you had invested in like one or two exchanges and one or both went down and then everything's wiped out. You want to have them on cold storage, on hardware wallets. So, with that being said, the last thing that I want to share with you here in this video is the 50-50 trade and hold strategy. The first thing that is on this checklist here is to decide on a total number of coins that you want to buy. right? So we already talked about being within your budget and your risk tolerance earlier in the video. So as long as you've already gone through that first checklist in the beginning of the video and you feel good moving forward and you go and buy it, you say, okay, so how many am I going to buy within that budget, within that risk tolerance that I have? Okay, so then decide on that number and make sure that that number is a big enough number where you're comfortable in holding half of it long term and then leaving half of it to be able to trade. So what I'm saying here in the second check on this list is to hold half of the coins for the long term. And long term to me might be different for you, but for me it's basically a decade. It's like 10 years. Now I'm 30 years old, so for me that's long term. Some people, if they're in like their 60s or 70s, then long term might be somewhere like 2, 3, or 5 years before they want to pull something out of their investment. So what I mean by long term is let's hold it for years, and whatever number of years you decide is long term, I'd say at least a minimum of a year, right? And then probably my max would be about 10 years for something like this. And then that's when I'd decide, is it a good time to sell, right? And then probably I'd sell, I'd cash out. But I'd keep half of them for that down the road, and then I keep those in my hard wallet safe off the internet. Only I have access to them. And the other half I would use for trading in the short term. So I would do my homework, obviously, and learn to read the market trends. And if you're willing to learn that kind of stuff, you can watch these markets and you can watch the trends and you can decide, am I going to hold for the next couple of months and see where this goes? And if it reaches this threshold, I'm going to sell 100 of these coins. Or if you have thousands of them, maybe you sell 1,000 or 2 of them. Okay? But the point is you leave half of them for trading. And for me personally, I wouldn't just take half of it and then trade it on the first chance I get to have a big return. For me personally, let's say I have 1,000 coins and I'm trading with 500, right? And I'm holding 500 long term, 5, 10 plus years. Now, if I'm trading with half of these coins and I have 500 to play with, I'm going to wait for the price of that coin to go up, and if it goes up by 100% or more, I consider that a time where I want to sell some of them. So I might sell 100 of them and then keep 400. If I really believe in the coin, I'm going to continue holding the 500 long term, and I still have 400 that I can trade with. Now if I wait a few months and it happens to go up again, now there'll be all kinds of volatility in the in-between time, but say it goes up again, I might sell 100 or 200 more, right? Now, if I were to sell all of them on the first time it went up, I might make, I don't know, 100% return. But if it goes up 100% once, and then maybe 3 or 4 months later it does it again, 3 or 4 months later it does it again, or even a few days or weeks later it does it again, I have 5 opportunities if I just go with a fifth of what I'm willing to trade or sell off during those up times, right? So if I have half of what I'm invested in and I'm willing to trade that or sell that off during up times, I'll take a fifth of it each time it goes up, and I'll just do that 5 times, right? So instead of 100% or 200% return, I could possibly have 500 or even 1,000% plus return. Now, that's the possibility. We know that's possible because in 2017 alone, Bitcoin went up over 2,300%. So that is totally abnormal. Like, we don't normally see things like that in, say, like commodities or regular stocks or really any other kind of investment that we've ever known until cryptocurrencies. Like, cryptocurrencies have completely changed what we see as normal as far as percentage returns and how much it can go up and down in a short period of time, right? So just think about that when you're trading, because sometimes people get scared in the market and they see it dropping and they start selling everything. That's why you have to make sure you found something that you really believe in and you have done tons of research and it seems like a very, very promising company and team behind the project that you're investing in as far as this crypto technology is concerned. And if you feel really confident about it, then just remind yourself of that when the market takes a dip, because some of those coins, yes, they will die off during those dips. Some will not survive. That is just the way it's going to be. But the ones that do survive, you have a higher chance of the smart picks that you've chosen surviving than you do of just blindly and randomly choosing anything and everything to put your money into. That would be a really bad strategy. That's a way to lose a lot of money really fast, because you don't know what you don't know, basically, right? So you're looking at all these random things, putting money into them, and you don't know if they have a good team or if it's just somebody ready to pump and dump and walk away with millions of dollars, and then you lose everything because they just dumped everything, price plummeted, and there you go, you're left with nothing, right? So that's why I say do the research. That's why I say go with the things that you believe in your heart, and that's why I say you only put into this what you're okay losing. Just put your play money into this. Don't put your rent money, your grocery food shopping money, or anything else that's really important to you into this. Just play with it, have fun with it. And obviously, when you start to actually have some profits, you want to use those profits to diversify and scale out your portfolio. And if you do that, you can have a lot of fun with this thing. And if you treat it like a game and you don't treat it like this is like your next meal, then you're going to have fun and you're going to do things that are going to create a pretty cool portfolio that can ultimately lead to you building some wealth with this. Don't take it so seriously to the point where if you lost something, it would be a psychological impact that just knocks you out of the game. You know what I'm saying? Like, to make you put a bad taste in your mouth and not want to trade or invest in this stuff, or to just get really down on yourself or depressed, right? You want to just have fun with this, play with it. Yes, you can treat it like a serious thing as well, but don't forget to have fun. Don't forget to, just explore, be curious, and and lower your risk in every way you possibly can in terms of diversification on the exchange level, in the wallet level, and in the actual cryptocurrency space itself, in the coins that you're investing in, as well as just every action that you take. Is this within my risk tolerance? Is this something that I can handle financially as well as psychologically, no matter what happens in the market? And if you can check all these things off your list and you can follow all these steps and it feels good to you, then you're going to enjoy the process and you're probably going to end up with some pretty cool returns. So I hope that this has been helpful to you. Again, I'm leaving all kinds of links and resources in the description of this video. If you like the video, then hit the thumbs up, subscribe to the channel, hit the little symbol with the bell symbol so that you get a notification the next time I put a video out for you. And until next time, guys, take care and happy crypto trading.